All right, traders, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and it is Friday, March 19th. So, couple events out of the way for this week. Quad witching was today. We saw some little bit of whippy moves around the close. A couple things going up, a couple things going down. At the end of the day, really doesn't matter too much. This is just an event that has to get through, and then, things will kind of reset a little bit for next week. So, as always with these end of day quad witching moves, if you can kind of, maybe pick some names up at the end of the day, that have moved a little bit too far, that got pushed around with heavy volume because of the S&P and NASDAQ rebalance. That's one of the ways that you can kind of game the index rebalance at the end of the day, or also, one of the things that we talked about is making sure that you had orders out at the end of the day in case you were a recipient of, one of these whippy moves at the end of the day. So that's about it for quadruple witching. I would also note that, when you're going through your charts this weekend, you're going to see every single name see a lot of volume, right? Do not get misled by that, right? I always see that on Twitter. Oh, look at the volume in this name, big volume, but it's all quadruple witching, right? So it's all index rebalance related. So, remember that if every single name sees high volume, you kind of just have to say, hey, let me, disregard that for now and go from there. So, besides getting through those events, the other thing is, we are still getting through some weak seasonality, right? This is this March time frame. Really, once we don't really begin to see the light at the end of the tunnel until we get to the end of the month. So that's what I'm expecting. Seasonality isn't like the number one top factor that I look at, but it is one of them, and I'm aware when we have some weak seasonality versus some strong type seasonality. So I think so far, the seasonality it's kind of living up to what it normally is, which is kind of choppy, and that's how I would define today. Maybe not a choppy day, but a choppy. Sorry, I got a spelling error in there. By the way, if this video looks a little bit hazy to you, the high def video takes a while to render, so just keep that in mind. Of course, risk disclaimer in front of you. Everything that we're going through here is for information purposes only, not giving out any recommendations or advice, education purposes only. So, I would say to try to be positive. There were some things that acted decently today. The biotechs for one, we're up about 3%. The small caps also were up about 80 basis points. The Dow stocks finished down 1%. So again, I think some of this, I don't want to make an excuse for the Dow or some areas of the market, but I do think quadruple witching and the index rebalancing does have an effect for that. And I kind of just chalk today up as, a difficult day and one that I don't really put a lot of a whole lot of confirmation behind. So we'll talk a little bit about that. I would say right now we're in a pretty choppy tape, and I put a checklist down here. I think the last checklist I had was things that I wanted to see in terms of things that I wanted to see, in terms of, a couple weeks ago when the VIX was around 28, 29, when we had some volatility. Now, I think we have a couple different things going on. First of all, go back to that term, choppy tape, right? A lot of back and forth price action, not a lot of momentum, I would say, overall in the market. A couple areas will have momentum in the market for a day or two, or like for a half a day, and then they kind of stall out, right? So that's kind of how I defined a choppy tape. Also with the indices, just not really showing a consistent trend. So that's how I would define that. The takeaways and some management within this time is to have lesser positions on. This is my checklist. This is what I tried to do: is have smaller positions on, less positions, um, little to no short-term options. The more short-term options that you have on, in my opinion, in a choppy tape, unless you're selling premium, the more you're going to get hurt. Patience, right? Of course, that's a big thing always in trading, is to have patience, and then looking for more singles, base hits versus home runs, right? And I'll talk a little bit about that in today's trading. That was my goal today, to just kind of say, to really not get crazy with putting on positions, for swing trades right now. I've been doing that a little bit here and there. I'm having some success with it. What I've been witnessing is that some of the trades that I put on will be off to a good start, and then the next day it's the complete opposite, right? I put on a couple steel names yesterday, and they lost the follow through in the second half of the day, and today they were down a little bit. So taking targets is important, but the more swing trading I'm doing right now, the more frustrating it seems to be, because we're just not getting a lot of follow through. And if you keep your positions small, the nice thing about that is you can kind of scale into some things, and you can when you have a sideways type tape, you can add to some of those things on the down days, because you're certainly getting opportunities to add things on the tip. All right, so let's talk about the price action for the day, and we'll go through the charts. I mentioned, and I realized in yesterday's video, I said, well, I'll go through the VIX the VIX charts, and I never did that. So S&P finishes down for the day, and really not much, progress from where we finished yesterday. There was this headline that came out, about for bank rules and so forth, and some stimulus that was going to run off at the end of the month, right? That kind of brought things down here in the beginning. We started to slip around 9 o'clock and just basically kept on going here to the open. So, we did finish off the lows, but just not, a huge amount of, momentum off the lows. Same thing with the Qs, right? We could not get into value. We talked about this. I try to put these charts, these S&P charts, and I was pretty adamant about this today. I said this was at 12:56 today. I said I would love to see us, get into value. Sometimes when I post these things, I feel like I'm just, I'm being negative, but it is what it is. Right now, we have a more challenging tape on our hands, and I said, I would love to see us make a move higher. I said, but just be mindful that, we're coming into some short-term resistance for the day. Hence, like yesterday, right? Yesterday, kind of same thing. We made a nice rally. Well, I don't want to say nice rally, but a little bit of a rally off the lows yesterday. We hit that top of value for the day, and that was it. And that was at 12 o'clock yesterday. We made a lower high, and, we've been trending down since then, actually the last couple days, but so if we switch over to the Qs, I just wanted to illustrate that at point with the with the 5-minute value areas. Same thing for today. We hit this barrier right around 12:30. Some nice movement there, and then just things kind of just ran out of steam. We kind of tried to check into this a couple times, but we just don't have the market just doesn't have the power to do that right now, and I don't really have a major reason for that. Other than the seasonality, perhaps we're just not at the point where we've kind of washed out on a negative basis, right? I do think that there's too much complacency in this market right now. Meaning, I'll give you an example. Last week, so one of my favorite follows on Twitter is Helene Meisler. I love that her post that she puts out. She's very objective. I always like the people on Twitter who are just very, very objective, right? They'll put out analysis, and they'll kind of draw conclusions based on what the charts are telling them, based on what her indicate. She uses a lot of indicators. You know, whatever those indicators are showing, she'll then make a conclusion about that, right? She's not biased. It seems like in either direction. She's not a big market bull or bear, or if she is, she does a good job at analyzing what's in front of her chart, both on the price charts as well as what the indicators are doing, and then drawing conclusions. So she's been running this poll every Saturday about what's the next 100 points in the S&P, up or down. And last week, when people voted, it was one of the biggest. It was skewed very much to the upside. It was people voted 65% to down 35%. So that's very hot sentiment. And it's funny because whenever that happens, like there's been a couple cases, but I think this was one of the most extreme polls that she put out. And I've seen it before, like around 60-40. And every time that comes out, people argue. Oh, well, you've had more people vote this time, so maybe you should throw that out or whatever. But so people are always looking to discredit what the results are when they don't come the way that they're looking for. And one thing that I've learned is to take the information and don't argue with it, but take it and say, try to use it. But yeah, I responded to someone who was on her feed, was like, oh, well, you have so many more votes as usual, so it's different this time. And I said, hey, I voted early, and I voted up, by the way. But I voted when there was only like 500 votes, and it still set around like 64-65%. And I think her total poll was like, somewhere like in the mid thousands, like 4,000 or 5,000 or something like that by the time it was done. So, sentiment is not, is too complacent, I would say. And if you look at things like even, I know people don't like to look at this a lot because people like to dispute this one too, saying, oh, it includes too many things, but the put call ratio, it's just too high. I'm sorry, it is too low, right? Yesterday, we were down, NASDAQ was down 3%. You would think that would incite some fear in the market, meaning, the put call ratio being like a 0.6 at least, or 0.7, a 0.8, with the NASDAQ being down 3%, with the indices closing on the lows, and we're just not getting that like fear in the market. So, it concerns me that the technicals do not look good, and the sentiment isn't to like a contrarian standpoint where people are getting pretty washed out, right? I think people are getting frustrated, but I think people are still ready to think that the market is just going to continue to rocket higher. So, we talked about the daily chart yesterday and how price slipped into the value area. And, we found a little bit of support here at the 20-day moving average. But take it for what it is right now. We're inside value for the month, right? And that means range bound for now. So, we don't really have any confirmation of a turn yet. We're still trying to figure that out, considering that we were down another 20 basis points. So overall, I mean, the S&P chart does not look horrible, right? We've obviously just slipped back a little bit and given back some of the previous week's gains, but overall it doesn't look bad, right? And we'll get to the and I think I have the performance for the week, right? The performance for the week was the S&P was down 1.1%. Small caps were down a little bit more, but the Qs were only down, fractionally for the week. Even though that day yesterday was pretty ugly, the price action is not all that horrible, considering that. And remember, again, last week you had the small caps. So I chuckled because I was just listening to a CNBC commentator. I won't mention who it was. But they were just saying, the small caps got pummeled this week. And I'm like, okay, you have a point. They were down 2.8%, but look at what they did last week. So, if you look at the average over the 2 weeks, they're still up almost, about 4.5%, for the last 2 weeks. So when you put it in perspective, it's not that bad. I understand what they're trying to do. They have ratings to sell and advertising money to generate, but I don't view the small caps as getting pummeled this week. When you look at, they were up 7.4% the week prior. So I don't know. Maybe I'm being a little bit optimistic. And if you maybe just a little bit. And if you look at the small caps, right? I mean, they're still, very close to the all-time highs. Now, again, they did slip into value yesterday, and I would like to see them get back above 228. But all in all, it was an ugly day yesterday. There's no doubt about it. The Qs are where there's some trouble still. So I spent some time on the Qs yesterday. What I would say is, considering that the Qs did make they did trade off the lows, but you have a low for the week, right? And what I would do is, if you're adding risk, because I get a lot of questions about, like, hey, should I be buying the dip? What about this name or this name? I could tell you a lot of the growth names, they look very similar, right? Meaning that we've had to move down here. We made a low back on 3.8, I guess, or intraday low maybe on 3.5. But we closed on the low, for a closing low that was on 3.8, right? So since then we have a bounce, we have a pushback, and it's too early to tell if this is going to be a higher low yet, right? We don't really have the confirmation. And one of the things that I said in yesterday's video was that, we could do this kind of move down, move up, and then go back up to the right. That's definitely in the cards, but it remains to be seen, and we don't have really any confirmation. So I would watch, and if you're adding some things, watch the low of the day. Let that be your stop to trade against, right? And that's, you could do that in a number of different names. But that's how I would do it, because if we break today's lows, then you're going to have to say, okay, the next place where there's support is down here, and if we break that, that's this 291 level, 289 level that I was referring to a couple weeks ago in the beginning of the month. That is still in question. Okay, if we kind of take out those lows, and if we look at the weekly chart, I still think that that's a possibility. Where would I put that in terms of percentage probability in my mind, right? And this is just in my mind, in my opinion. I don't know, maybe about 15%, 1.5, right? We're holding the 20-day, but we know that we've got some support back here at 289. And what would happen if we do get down there? Well, probably sentiment would get pretty washed out, right? You would get a lot of people that would be pretty disillusioned with the market. What happens when that happens? When people get disillusioned with the market, the weekends completely have been shaken out of the market. Then usually reversals happen. So that's one thing. So, and this is basically how I analyze the market. I associate a probability with certain outcomes, right? I know that we've got really strong support down here in the Qs. Do I think that we go, the probability of us coming down there, in my opinion, is not great right now, because we're still above the lows of 3.8. So I can't associate a high probability, because number one, we're far away and we have more support. But that's how I would do it. What do I think is the probability that we could, move higher? Is probably about 25-30%. And then there's probably another 25 or 30% that, for me, that says that we could go back and test the lows. So going through that analysis, what does that mean in terms of where I should be taking risk? Not much, because I don't have conviction in here. Because again, looking at this and looking at what I can extract from this is that I know that we're below value for the month, and I know that we're below all the short-term moving averages. That's not bullish in the short term. So I have to respect that, and not make predictions, about what I think is going to happen. I can associate those probabilities and adjust those probabilities and my comfort level and my confidence level if things change. But we don't know if we're going to charge down here or fall down here, or do some type of left shoulder, head, right shoulder, neckline, and have some type of inverted head and shoulders. So there's a lot of possibilities, right? And I know some people like to say this is what's going to happen, but I think you just need to kind of sit tight. And if you are going to add to some things, everyone has a different time frame. There's nothing wrong with, if you have a long-term time horizon, to be doing some dip buying, in my opinion. But if you're kind of where I am, and a medium-term swing trader, I wait for more confirmation. Okay, so that's what I see in the indices, and as analyzing the cues in more fashion, because these are the names, because you can't just ignore the cues, right? I've seen people say that on Twitter, and they're like, yeah, well, I don't care about the cues. Well, they do make up the biggest portion. Some of the names that are the biggest weights of the cues are not in isolation. They're the biggest portion of the Dow. They're the biggest portion of the S&P as well, right? Because the S&P 500 is market cap weighted. The biggest companies get the biggest weights. So I would love to say, and you've heard me say over the last couple of weeks, that there's better places to be trading. But when we have big volatility in the Qs, it brings everything down with it. It does. Things don't operate in a vacuum. I wish they did, but to some extent, right? Not to the whole extent. But if you get big volatility coming down in the Qs, it starts to set things off in the algos. Okay, so let me get back to my spreadsheet here for just a second. So what performed well today? Interesting that the energy names came down. They had a pretty bad week for this week. Oil services was down 10% for the week. Solar stocks got hit over the head this week again. A lot of that momentum that really drove the solar stocks and clean energy stocks over the last couple months is still coming undone. Metals and mining were particularly weak too. That was a strong area of the market. They went down. They were down 0.5% for today. They came off the lows, but they were down for the week. Oops, let me bring up my other sheet. Sorry about that. XRT, which was strong last week, was down 3.6%. And actually the banks were down, off of that reversal yesterday. So interesting price, how things wound up. The home builders were up 2%. Semis actually were up 1.1%. So they actually held in there. Again, very choppy, those semiconductors. A couple times, and it depends. Like if you look at a couple of these names, like, I like to look at Lam Research. It hung in there all week long. Again, choppy as hell. You couldn't have made money on an option trade, in this name. But Taiwan Semiconductor which is one of my favorites within the group, looks very weak. So it's a tough picture. Intel, which has had a lot of issues, looks actually a little bit healthier. AMD, had released a new chip, but as far as they went, this to me looks just an ugly chart. It's back below the 200-day moving average, by the way, which is not good, right? So, and I see that like and I'll look in terms of either like within a sector in tech or in growth. And I see one or, a couple names that are faring much better than a couple other charts that look horrendous, right? This kind of looks like the S&P chart a little bit to some extent over the pattern of the last couple weeks, right? A break lower, retest into bottom of value, and a failure. And again, we don't know where this is going to be situated, right? So I'll go over a couple of things that I thought looked constructive for the day. But so bottom line is, right, for this tech group, right, we were talking about this name at the end of the day too, Cloudflare. right? This took out a VPOC. Again, same, very similar pattern. Bounced and failed, right, for now. And still underneath all the short-term moving averages. SE is another name, too. You know, first time it's really broken the 50-day moving average like this in some time. But what you want to see when names break the 50-day moving average is you want to see them get back above it pretty soon, right? And this was close, right? We almost had this in the beginning of the week, but it's back here, right? So again, what does this look like to you? Well, it's been above the 50-day moving average for a hell of a long time. It's not anymore. So, you know, right? So the 50-day moving average is very powerful for some names that have been in an uptrend for a long time. And once they lose it, they become hands off for me. All right. So let's talk about a couple names that did do well today. And again, I'll turn this over to the trades channel so you could see the trades that I did today. DraftKings was great. Got into DraftKings, just a little bit under $70, and scalped for a couple of dollars. So again, base hits, right? These are not like, I took one quick target for like 50 cents and, right, took target 2. I think I took another target, and again, I'm leaving a last piece of the last sliver of the trade left because the chart looks good. But again, it's really tough to have a lot of confidence right now. So again, that's the last piece of the trade. We were talking about Facebook in the room showing some nice strength, and again, if you look at how I'm trading this, I'm joking, I'm laughing because it's a little bit painful, right? 287, taking a target $2 away. This is not how I really want to trade, taking $2, $3 targets, and in stock, not using options because I think options are just too difficult. So it's tough. It's tough to get big winners. And where did this thing close? I've read around at my last target. Target, and that was out of Facebook. I tried Etsy too. Like Etsy, I said I've been thinking about this company, Etsy. I like the company, but it's just too damn close to the 50-day moving average. So I chased this thing a little bit today. Right, it was hot out of the gate today. I took a target, and and then look at what happened. Right, the trade actually turned into a losing trade for me, because it didn't really, I said, okay, it's turning the corner here a little bit. It capped, and I was like, okay, well, as long as it holds in here, but look at it, all the way down to 215, and I hate to sell something at the low of the day, but I would just rather be defensive. So 2 winners, 1 loser, right? And again, this is how it's frustrating, but this was one trade that I held for. So again, this ends up being a loser. So look at this stock today, Tech Resources, right? You would think that this would have. It unfortunately just never really worked for me. I think I hit one target in the trade, and we've seen all kinds of call buying in the name, just never fully broke out a value for the month. And it closed on the absolute low. So yes, there could be something going on with quad witching, but I mean, I'm in June calls, which has plenty of time, but it's just too frustrating. And at some point, what happens to you with some of these trades is you really the frustration wears on you. And it's almost better for me sometimes to just wipe the slate clean and to start over. Because what happens is, right, I took off this trade yesterday too, this Microsoft trade that, again, I mentioned yesterday that I just added risk at the wrong time on Wednesday, which again, mistakes happen, right? So I put this trade on, just a little bit of calls, right? Not a huge amount for 1150, and I took it off at the end of the day. We were discussing this name, and I just said this group doesn't look good. Now, again, I have time in this trade, but look at it, even with the Qs finishing positive for the day, Microsoft finished down, right? So, this could come back, and it's my job to monitor it because I could easily get back into Microsoft if it gets back above, the 50-day moving average, back inside value. But why keep something on the books that is going to decay and it's not leaning the right way? Because I don't know if Microsoft will go down here. My original reason for being in Microsoft was that it was turning higher. This was Wednesday, right? This looked okay to me, right? And what happened in the overnight session Wednesday night into Thursday morning. The bottom fell out of the market. So this is a little bit unlucky, right? And that's why you scale into a position. So yes, it cost me money, but not a boatload of money. But the point that I was trying to make here is you got to continue to kind of adjust to this information. And sometimes it helps me just to kind of take the position off rather than get distracted and by having to watch it and watch it not work. It's really begins to hurt the morale, the more positions that you have on that are not working. So, again, I hate to do things like this, right? To get out of something at the low of the day, but I just don't want more problems for next week, right? Because if we do come in and it's another nasty tape in the beginning of the week, right? Then it's like, geez, I've got, 5 positions on that are not working. What do I do now? Do I add to them? Well, the charts don't look good, or do I just let them sit on my books and decay and lose money that way in an option? So, it's the point that I'm trying to make here is that it's very tricky when you've got this going on. So I go back to, right, and I think this is where I'm going to leave it for the week. Small positions, less positions, little to no short-term options, being patient, singles and base hits versus home runs, right? And I think that's the way to play until we've have this, a little bit more confirmation in the overall tape and in some of these groups and some of these sectors. So, so I would try to kind of save your confidence a little bit with this. I've been reading a couple books about this over time about trying to make sure that you're keeping your confidence intact, because I know personally when the tape is moving in the right direction, to me I'm going to make money and I'm going to excel there. But what I have to try to avoid doing is losing money when the tape is not a good environment, right? And that requires patience and discipline. So that's where I'll leave it for the week. The last thing, because again, I try to end these on a positive note, is working our way through March. Once we get to April is normally a stronger seasonal time. So that's kind of where you kind of have to look for the light at the end of the tunnel. And basically, one of the phrases that I use too is survive in advance, right? You have to be able to survive, a crappy week or two of a tape so that you can rebuild and be better. But this was a down week. This was a bad week, overall. I got caught in too many trades. So, we'll look to regroup next week and power through and capitalize on the opportunities as we see them. All right, guys, have a great weekend, and I'll see you on Monday.